Okay, quick heads up. This week's video is going to be a little longer than normal, but that's because I'm going to give you some teaching tips here. I'm going to go through pricing, how to price special projects. And so what I want you to do is get your paper and your pencil or your iPad Pro and your stylus, which is my favorite, by the way. If you're not using an iPad Pro, get on it. It's fantastic. You just take all your notes, you write down, and boom, and you send it electronically. Works like a hot damn. Anyways, here's what I want to talk about today is pricing special projects, okay? And there's 3 keys to pricing special projects, okay? And it's value, there's structure, and then there is price. I'll just make sure that I'm in the screen here properly. Yeah, so I'm just gonna step aside a bit here. A little bit wonky, but you don't care because you're just trying to get the value out of this video, not the aesthetic quality of it. You'll notice that I don't do that with my videos. There's no like fancy, you know, animations and all the rest of that crap. You don't need that. You just want tips that are gonna help you become more successful in your accounting practice, give you your 3 freedoms back, right? Okay, so here's the thing. Special projects. How do we price special projects? And by the way, I'm already assuming here the people that I'm talking to are not billing by the hour, okay? Because billing by the hour is literally you just how many hours and you bill by the time and then that's the value. I'm talking about taking a special project and going, how do I price this? How do I value price this special project, okay? So here's how it goes. First of all, value. What's the value? What are the 2 parts of value that your clients perceive? And it's always in the perception of your client's eyes, okay? How do they see it? There's two ways that I look at this with value. One is quantitative, and the other one is qualitative, okay? And again, like I said, hope you have a pen and a paper, write all this down. So, quantitative. What's the 3 measurements that I look at for quantitative value? When I'm looking at it saying, okay, well here I'm gonna do this special project, what am I looking at, or the pricing? And by the way, this could be special project or this could be ongoing yearly work that you're doing for the client, by the way. It's not just for special projects. Say quantitative, so it's quantitative, it means numbers. These are the things that accountants really love. We can hold on to these are numbers, right? There's 3 numbers that I look at, that I like to look at, is net worth, net income, and value of the transaction, okay? So what do I mean by that? Well, if I'm going to do some special projects for a client that's got a net worth of, and normally, actually I do it the other way around, so hold on. I didn't like that. I'm gonna change this. I always do it in different order. Here, let's do this. Net income, net worth, value of the transaction. So net income, let's put it this way. If I was working with a client who had a net income, annual net income of $50,000 a year, okay, what I could command as a price for whatever work I'm doing for them is going to be totally different than if the person's making $50 million a year, okay? This is what about value pricing is. What's the value of this transaction to that person? The $50 million person can afford a lot more than the $50,000 person, so I'm not going to charge a $50,000 client who's making $50,000 a year, I'm not going to charge them $50,000 for services because then that would wipe out their net income. So this is kind of a filter to go, it's another client filter as well to decide whether or not you want to be working with them. But the $50 million client, the price goes higher. So now we go, okay, well, this determines the price going up or down, right? Up or down. The price, based on the client's net income. Same thing with their net worth. If they're worth $1 million, it's going to be different than if they're worth $500 million, right? Changes the value to the client because the client can afford more. Value of the transaction. This is where we have a special project. So let's say we do a special project and we're doing an M&A transaction. We're buying and selling a business. Well, if the buying and selling of the business, again, if the business is $1 million sale versus a $100 million sale, that changes our price, right? All of these factors, these qualitative factors, go up or down in terms of what we can charge for prices. Now, what do I mean by qualitative? Qualitative is, this is more the touchy-feely. This is not the easy stuff for the accountants, for us accountants to deal with, but it's the most important, I'd say, to really get your head wrapped around. Is what we're trying to do is this is the feelings. This is the feelings part. We're talking about the pain or the pleasure, okay? So what are they trying to get away from? You have a client comes to you and says, please just take away this from me. I don't want to do this. I can't do it. I need to go focus on this. Please just take it, take it, take it, take it, take it. Well, okay, guess what? The price just goes up, 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 up in my mind because you're taking away the more pain. Now, this is not taking advantage of someone. I want you to understand this. This is actually serving them. It's because it's more valuable to them for you to take it away than someone who goes, yeah, I do it all the time. It's no big deal, but yeah, sure, you can take it. There's a total difference in value to both those people, and value is perceived in the eye of the beholder. So in this case, if it's a higher pain threshold, the price goes up. Same thing with the pleasure. If they're desperate, I really want to get this, I want to sell my business so I can go off and retire, and it's really important because I want to go and spend it with my family, and they're so hungry, they want it so bad. Well, that puts the value up. So we're talking about how much of a value is created through the work that you're doing with them. Again, the two different ways of looking at it is quantitative and qualitative. And these are the different ways of looking at it. Now, structure. When I talk about structure, I'm saying, how do you structure your pricing? Like when you're going to charge the client. And so again, let's talk about special projects, for example. So let's say we're doing a special project. So you could do a special project for a client and say, what's the structure? Well, maybe the structure is just a one-off. So I just charge them, we'll charge them a lump sum at the front of the deal. So we'll call it one-off lump sum. And they pay it and always pay at the front end. I'm a front end, I don't chase the money, get paid at the front end. So there's a structure where you could do this. If you're doing a special project, it's like, okay, it's gonna be $10,000, pay it today, boom, lump sum. The other structure way, maybe the change or what you're going to do, it becomes a monthly amount that you're charging them. So it's a monthly subscription-based model, which is like what I show in the Accountant Success Formula with ongoing clients. For your yearly work, you want to put them on that monthly retainer. Maybe the special project is a monthly. Maybe they're going through an audit, a government audit. Yippee, a lot of fun for them. No, fun for us. Can be, if you price it properly, maybe it becomes a subscription model where they're just paying you monthly until we close the deal, until it's done. Maybe it becomes a monthly, or it becomes a combination of the two. I mean, you can mix and match these. These are all the different structures that we do in the Accountant Success Formula, and in the Mastermind, we come up with all sorts of different ways of structuring these deals. And then maybe the last one, maybe it's a percentage of the, I'm calling it percentage of the close. Let's say maybe you're helping a client sell a business. Maybe it becomes a percentage. Where I was just doing that with my buddy Tony the other day. We were working on a percentage on a deal, and we're looking at, you know, it's going to be a good size change order, like a good size deal. Maybe it's a $10 million deal. Well, if it's a $10 million, maybe we'll take 5%. Let's take 5% of that. Sound good? That'd be 500 grand. That's okay. I'm okay with that. That's just giving you an example. So the second one is structure. How do you structure it? Now, the last part of this is the price. Now, what I mean by the price is whatever price we choose, once we figure out what the value is going to look like, here's the value, and then this is what I think the structure should be. Then when we combine the two together and we come up with the price, and so this is kind of measured off of the structure and the value, I look at three things. I want to look at three things. You want to look at three things. Is one, does it motivate me? Motivate me. So does it motivate you to actually want to do the work? And this is an interesting thing. It totally turns the tables around. And I put that down first for a reason. This is about your accounting practice. You actually get to decide whether or not you work with clients. You know that you actually have way more control than you think. You get to decide ahead of time whether or not you want to work with the client. So it has to motivate you first to go, yeah, that motivates me. I'm getting up. I'll do a percentage of the deal. And by the way, on this one here, percentage of the close, I sometimes do it contingently and say, if we don't close anything, if nothing happens, you don't pay me a penny. It brings you on the same side as the client, saying, I will help you through this whole process, structuring taxes, all or whatever. If the deal doesn't close, you don't pay me a penny. But if you do, you'll pay me 5%. What a deal for the client, right? They're not going to pay you unless they close, and you're going to get way more than you ever would on a deal like this, and if you build them by the hour, right? So I'll take that. So that motivates me. I don't know about you, but that motivates me. You know, it motivates my buddy Tony too. I'll just say that. Okay, so motivate me, that's number one. Number two is motivate the client. And so what do I mean by that? Here's an interesting thing. If the price isn't high enough, the client won't see the value in it. They actually will not be motivated to want to do the transaction with you. They will not be motivated to work with you. It's an interesting paradox that the higher the price, the more value they perceive. Because a service, they come up and talk to an accountant, oh, how much to do the tax? Well, I'll do it for $1,000. Okay, fine. And they come to another accountant, and the accountant's like, oh, it's $25,000 a year. Holy crap. That accountant must be providing a whole bunch more value. It's in the number. So when you're looking at this price, make sure that it's high enough that it motivates your client. And again, this is what we spend a ton of time on this in the Accountant Success Formula Masterclass and in the coaching program and masterminds. It's how do you find that right number? And it's an art. It's an art and a science. So then the last thing that I want you to think about, it needs to fit your business model. And what do I mean by that? We can do a whole bunch of work. We can do all sorts of different work. But should we do the work? Does it fit the business model? And at the front end of the Accountant Success Formula, we always build a business model for your client and for your business, for your accounting firm. And then we start building towards it. And so anything that doesn't fit that model, we're not going to do it. No, we're not going to do it. We're not going to do it. And so that means the wrong type of work, the wrong type of client, and in this case, notice I went to the middle finger, the wrong price. It has to be the right price to fit your business model and say, yeah, does it make sense for me to take this time, especially with special projects? There's a lot of special projects where you can make a lot of money, but if it takes you away from all your ongoing clients on a regular basis, maybe it's not a good idea to do. Anyway, it's one of the things to think about. So again, as I said, a little bit of a longer video this week, but I wanted to share this with you because it's something that's been coming up quite a bit recently, and I wanted to kind of formulate it and share it with everyone who's watched my video, everybody out there in video land. So here's the thing, pricing. When it comes to pricing, how do you price it? Again, we're talking value pricing. We look at value, structure, price. These are the three things that I look at. Again, I hope you wrote all those down or take a screenshot and follow it through. Value, structure, price. Go get yourselves some change orders like that, special projects. Let's get some $100,000, $200,000 change orders. Or if those numbers are too big and they scare you off, I mean, it's up to you. It's whatever number works for you. This model works regardless of the numbers. Really, it's just another zero. That's all we're looking at. $5,000 versus $50,000, or just a couple zeros. Not a big deal. Anyways, there you go. Value, structure, price. Again, I'm Eric Solbakken, reminding you that when you take back control of your business model, you can take back control of your life. Stay tuned for more success tips to come.